Hey guys, Lincoln here from bowacademy.org. Today I want to talk about SPACs and why there are much bigger deals than people seem to believe. So before we get into SPACs, we have to first define what it means to invest. Let's take a look at the definition of the word vest. Vest means to come into the possession of, right? That's why we say invest in your future, right? Invest. The purpose is right there in the name. We want to vest into wealth, right? Investing. The whole point of investing is to acquire an asset early, today. Believing that if you hold on to that asset and you vest into your shares of that asset, you will build wealth from the appreciation of the value of that asset in the future. We acquire assets today and invest into wealth via the appreciation of the value of those assets. There's two variables here, right? There is the value of the asset and then there is time, right? So you have only two variables to consider here. The value of the asset usually starts out low, right? Because the whole point of investing is believing that that asset is going to rise in price. So we have this vision of the future in which the value of that asset is greater than what it is today, right? So we acquire that asset today, hoping, believing that with fundamentals, that asset will be worth more in the future. So the earlier that we get that asset, the earlier that we acquire that asset, the more time we get to participate in the appreciation of the asset. So now that we've defined the definition of investing, you might now start to see why SPACs are so special for public investors. Let's take a quick second to talk about startups, right? Just to hammer in the value of early investing and participating over time. So there are people out there called venture capitalists, angel investors, early stage investors, people who have lots of money, who want to increase the amount of money that they have. They want to build their wealth, and they know that the most important variable is time, right? So they go out, they find private companies, early stage companies that don't have much value yet. They assess the value of that early stage company and they say, hey, I believe that with the right team and the right product, if this company continues to grow, the value of their business, of that asset, will continue to appreciate over time. And because I'm getting in early, I will have more time to vest into the wealth that can be built from this asset than anybody else, especially public investors. So these early investors, these early stage investors, venture capitalists, early angel investors, they give their money to early stage companies, believing that they will go on to the public market someday and that the public market will pay more money than that early stage investor paid for that asset. And they will profit from the margin between what they paid for that asset in the early stage and what the public investors, the late stage investors, right? The public investors are the latest investors because the company that's going through the IPO process has spent years in the private market, right? The early stage investors have been investing for years ahead of time. And now the public market, public investors are getting the chance, right? The privilege of investing in this company, believing that there's even more upside to gain, right? So they want to get in before anybody else gets in, before any other public investor gets in and benefit from the appreciation that they believe will come over time, right? So the earliest investors benefit the most. So that gets us to SPACs, right? Because we now know that public investors, the public investors on the public market are at a disadvantage to early stage private investors who invest in companies at their earliest stages. So how can we public investors compete with that or compete with the rest of the public investors? It hasn't been easy for a long time. until SPACs have become popular and acquired more credibility on the market. Right? SPACs have been around for a long time, but people have not been investing in them because they've been a little shady over time. So now SPACs are actually becoming credible and they're getting big name investors, and now they're less risky of an investment, right? So that is great. And now we can actually take advantage of the SPACs and be comfortable because we know there are many other smart money investors investing in these assets. So let's talk about why I believe that SPACs are such a big deal, knowing what we know now. We know the definition of investing. We know the purpose of investing. We know the two variables, time and value. The longer you spend investing into an asset, the more chances and time that you have to participate in the appreciation of that asset. So where do SPACs come into play here? SPACs are special in that they give public investors a chance to benefit from the advantage of being early adopters, those with early knowledge and the courage to invest in something that is uncertain, right? So if you have a chance to invest in an asset earlier than somebody else does, then you have an advantage over that person. So SPACs give public investors the opportunity to act as private investors, right? Because SPACs are different from normal IPOs. In a traditional IPO, most investors, even dabblers, right, will hear about an IPO of a company that they might know, right? It's a huge day, so most people are going to hear about it. But with SPACs, there's so much uncertainty around them. We don't even know what company we're going to invest in yet. The SPAC has 2 years to find and acquire a private company. So we don't know from the start which company that will be. But if we invest in that SPAC when it's still early, when its stock price is super low, believing in the sponsors of the SPAC that they can go out and find a great private company to acquire, then we can benefit from being earliest to that SPAC than anybody else, right? When I heard about FMCI, I got in early before most other investors found out about FMCI. When I heard about Nikola, they were still at $14, $20. I got in at an average of $20 for Nikola, right? Nikola Motors, when they were VTIC, right? Vecto IQ acquisition company. So I benefited from being invested in Nikola earlier than other public investors. As Nikola became more popular and awareness around this SPAC grew, the value of my stocks continued to grow, continued to appreciate, right? Because I got in much earlier than most other public investors. And even people who got in later than me on Vecto IQ benefited more than other public investors who got in after the merger. The SPAC gives us a chance as public investors to invest into a company before other public investors have a chance to even know that company exists. That's the beauty of SPACs. They go through a low-key IPO process that nobody knows about, right? Besides a few investors who are hyper tuned into the SPAC world. And if we as public investors, retail investors, get more tuned into the SPAC world and follow the news in SPACs, then we have a chance to benefit from that early knowledge before anybody else knows of the SPAC on its merger day, before anybody else knows of that company. That is the beauty of SPACs. You get the chance to get in earlier than other public investors. You get to act as a private investor, right? You get a benefit from similar concepts. The two most important variables in investing are how much time do you spend invested in a stock or in an asset, and how much does the value of that asset grow over that time, right? And the difference between when you bought that asset, when you acquired that asset, the value of it at the time, and the value at a later day is how much your wealth increases by, right? So SPACs give us a chance to get in earlier than we would in a traditional IPO process, and earlier than most other public investors because they don't know about SPACs yet. They don't know that these companies exist. And so we get in before the actual merger happens, before that big event happens, and it's huge news and it's all over the internet, right? And everyone starts to know about it. And that's when the hype comes in and the stock appreciates, and we get to benefit from that, right? And even if the stock goes down after that hype, it's going to continue to go up much higher than where we bought it at in the early days of the SPAC, right? So long as that company is a good company fundamentally, right? So of course things can go wrong, and that's just how investing works, but the principles are still true. You spend more time invested in something good, so long as its value appreciates, the more time you spend, the more margin, the more wealth that you build, right? And that is the beauty of SPACs. So I hope that clears up why SPACs are such a big deal, why they're becoming so popular, why everyone and their moms are starting a SPAC, right? Sponsoring a SPAC and investing in SPACs. There's a huge boom since 2019. 2019 saw 59 SPACs. We're already seeing 50 SPACs in 2020, right? SPACs are very popular today because of these reasons, right? Investors are realizing that, hey, I can get in earlier than most other investors, and I can benefit from the advantage of having extra time than other investors to participate in the appreciation of that asset. So thank you for watching this video, and always remember to practice the bull mentality. The bull mentality is that we know what we're investing in, we understand what we're investing in, we believe in what we're investing in, and we hold for the long term. That is how you build wealth in this country, right? That is how you give yourself the best chances at success investing in the stock market and any other asset class, right? Time and the appreciation of value over that time. Thank you again, and have a great day.